Hey, what's going on, guys? It's Nick here from Ways of Wealth. Thank you for tuning in. Week 22 with a market recap. If this is your first time here, we highlight key events over the past week in the markets. So if you learned something new, please give me a thumbs up. It definitely helps people find out about my channel. Make sure you subscribe, hit that notification bell. We do this every single week. We have an amazing episode this week. We're going to cover the past month on the markets. We're going to be looking at the US side of things. We're going to be looking at the Canadian side of things as well. We're going to look at CNBC, Squawk Pod. There was a little bit of a tiff that happened, so we'll cover that. We'll also look at Trump versus China. Nothing more to be said there. It's a great one. Excited for you to tune in. All right, let's dive into it. It's still unbelievable for me to think that we're hitting that halfway through the year mark. Halfway of 2020 is already said and done. It feels like things have just flown by absolutely so quickly. I don't know if you guys are feeling the same way, but this past week, with it being a shortened week in the US markets, things just seem to drag on. Time just absolutely slowed down. But it was a great week for the S&P 500 index. It crossed over that 3,000 mark, which was causing a little bit of resistance. And that was due to the vaccine news. The economies are reopening and people are getting excited. Sun's out, guns out. Everybody wants to, get things back to normal. But obviously it's important to remember that we're still dealing with the pandemic that is at large. So we have to still be safe, but we'll take a look at the past 5 days of the S&P and see what we can point out there. So as you can see, people return from the long weekend holiday, and the Tuesday opening started north of 3,000, which is absolutely a great thing for the stock market. Moving through the week, we see a pretty upward trajectory, a little bit of a pullback later in the week. But what we noticed this week for the first time in a while, probably since before the pandemic, the value and dividend stocks outperformed the tech sector. And that's obviously due to the end of the month rebalancing by institutions and hedge funds. They're taking profits off the tech sector and moving it into unloved, whether it was the financial sector. A lot of banks saw a lot of love this week. So we saw that trend happening, but the tech sector ended up at the end of the week pushing through and charging, which is awesome. And now we're going to flip over and look at the month of May for the S&P. And what we can see is the later 2 weeks are kind of that upward trajectory. As the months get warmer, people are excited to get it out. And over the month, the S&P performed, it gained 3.57%. And this is kind of amazing and, crazy for me to think that this is what's happening, granted all the things going on in the economy. But that's just the fact, and that's where we're at, and that's what we're reporting. And next up, we're going to look at Nasdaq, which is home to the tech companies. And we're going to throw that chart up right now. And as you can see, the Nasdaq is up 2% on the week. It's up 6.5% on the month. Like I mentioned before, it's been the leading sector for this market. Obviously, people are flocking to the Amazons of the world. There's a lot of investors looking to Tesla as the car company of the future. But what I would like to point notice to is that Wednesday drawdown that I was talking about before. And that's where we saw the hedge funds and the institutionals take some profits off the top. But as you can see, people pushed through and they brought it to a higher high. So Nasdaq's in great shape looking forward. It's obviously home to a lot of companies of the future. Next up, we're going to take a look at the Toronto Stock Exchange, or the TSX for my neighbors in the south. And we'll take a look at the 5-day performance there. And what you can see is that it's only up 0.8%, so it's definitely lagging its US, partners there in the south. And what we can see is there was a little bit of momentum that happened towards the later end of the week. We had a pretty big week in terms of earnings are Canadian financials, which make up a large percentage of the index. They reported this week, and it was actually, you know, pretty disappointing. I was surprised to see that stocks were increasing, you know, 2 or 3%. You know, we noticed that, you know, they had loan loss provisions come in. So what these loan loss provisions are is they're putting money aside, expecting people to default on their payments eventually. So they're getting prepared, which is obviously they're taking the provisions needed now, being proactive, which is great, but obviously they're indicating some type of future failure for their customers to repay those loans. So that's something that I've mentioned before, but something that I'm watching. Another thing is that because of this loan loss provision, it's cut their profits in half, even up to 70% for some of the banks. But then, you know, one of the big six on the smaller end of things, Laurentian Bank, has cut their dividend. So that's something that's really unheard of when it comes to the Canadian banks. You know, RBC has been paying a dividend since the 1800s. You know, a lot of these companies have maintained a dividend for over 100 years at this point. So it's something that, you know, the Canadian sector has to watch out. What is oil and financials making up majority of the index, you know, we will definitely lag the US economy moving forward. We saw a strong week for gold. We saw it come in and close at 1728 US. If you have watched this channel a couple months ago, we talked about gold. I'm not a gold bug myself, somebody who loves gold all the time, but I definitely love this asset class during these economic times. And we'll take a look at a chart right now, a long-term view, and we'll take a look at how it's performed in the past. So if we take a look at the chart, what we can see is the last time it hit these levels, it was during the Great Recession. So during that 08-09 period, you see the uptick starting to happen, and it peaks in September in 2011. It hits almost that 1900 mark. So we're at 1728 right now, and they basically, some people are predicting this to go all the way up to 3,000. Me personally, I don't see it going that high. I would probably look to take some profits off at 1850, but that's my own personal opinion. I'm not a financial advisor, but I definitely see this asset class outperforming over the next couple of years, especially with the amount of quantitative easing and the amount of money that's being printed into society. And last but not least, we saw West Texas Intermediate, which is a type of crude oil, have the best week it's ever had. At the start of the month, WTI was around $20 a barrel. It finished off the month at $35.49. This is a 74% increase on the month, which is a long way from, you know, just over a month ago when we were in negative territory for the first time ever. You know, the next closest level, what we can see is in September 1990, it increased 44.62% on the month. So almost a 30% differential in terms of an increase. So it's just interesting to see that dynamic, and obviously the going back to opening up the economy, people are anticipating that we will be using more oil. They've cut off supply and not producing as much, so it's kind of playing that supply and demand game. So that gives us a synopsis of what happened in the US and Canadian markets, and we also touched on what happened in gold and oil over the month of May. But next up, we're going to be discussing an argument that happened on live TV on CNBC between Andrew Ross Sorkin and Joe Kernan. And why I think it's important to take a look at it is I believe it's the underlying argument that's happening in America, and we'll take a look at that clip right now.
See, for a while it was, how can stocks be where they are because of oil prices? Remember, that was your take then.
Right.
How can it be based on where interest rates are right now? Then it could be, how can stocks be,
right.
And then it was every single discussion you have over the weekend is about how can stock prices be here when the economy is here.
Right.
Now it's going to be your earnings, but can you see how that probably isn't the coincidence, the stuff
Joe.
right in your face? We're going to have David Lebovitz on. He's going to say, Every client he talks to is asking him, how can the stock market be here when everything else is...
And that's the question. And there are a lot of smart people who have that view. You may not have that view.
Why is that the smart people? They've been wrong for 35%. Why are they smart? Just because they can see what's right in front of their nose? That doesn't make them smart. It makes them.
Joe, you missed it on the way down too.
Makes them not savvy about the market.
Joe, you missed it. Joe. You missed it 100% on the way down, and you missed the 100,000 deaths. So we can have this debate back and forth, and you can try to question the questions I'm asking. But there are smart people, including your friend Stan Druckenmiller, who has argued that the market has been over. Hold on. I'm not going to do this with you, Joe. Every morning you try to question the questions I'm asking. These are questions that investors are asking every single morning. I am just trying to get through some of this clutter. I may be right. I may be wrong. Investors may be right. They may be wrong. That's what makes a market. But it doesn't make people a good person or a bad person. It doesn't make it right to act the way you are. I'm sorry.
Okay. You yelled at the poor guy about the guy yesterday with masks. Is like, why are you yelling at me now?
I'm not, Joe.
You just yelled again. I don't know. I'm just trying to.
Go ahead.
I'm sorry?
No, you're not. No, you're not, Joe. I'm sorry.
Okay.
Go ahead with the news.
You panicked about the market, panicked about COVID, panicked about the ventilators, panicked about the PPE, panicked about ever going out again, panicked that we'd ever get back to normal.
Joseph, you didn't panic about anything.
What good is it? Why not help people keep their head? I understand that.
100,000 people died, Joe, and all you did was try to help your friend, the president. That's what you did. Every single morning on this show. Every single morning on this show, you have used and abused your position, Joe.
That's totally unfair.
You have used and abused your position.
I'm trying to help investors keep their cool, keep their heads, and as it turned out, that's what they should have done. That's what they should have done. They should have kept their heads. If they had listened to you, Andrew, we're supposed to be at about 8,000.
I wasn't arguing to go sell your stocks, Joseph. I was arguing about people's lives.
We understand.
People's lives.
Andrew, it's a global pandemic.
Do the news. I'm begging you to do the news, Joseph.
It's a global pandemic.
I'm begging you,
Andy.
Please.
It's a global pandemic, Andy, where per capita deaths, we're down near the low end of per capita deaths. We're nowhere near per 100,000. Most places are at 60 deaths per 100,000. We're at 29. So it's terrible that we've lost 100,000 lives. It's terrible. But it was never going to be that we weren't going to come back and that we weren't going to return to normal. And, siding with Ackman and everything else, giving credence to all that panic didn't help any investors at all, or people with their anxiety and everything else. So that's why we're here.
So my opinion of what's going on, it seems to be the underlying census from, all over the world. It's, people's lives and not wanting to opening up the economy extremely fast to have a second spike or just a continuous wave versus the economy. How long are we going to continue to stay indoors, and what type of damage is that going to do in the future? I know they break it down and talk about different things. Joe places an issue that what he's doing is he's trying to, ensure the people that we will get through this. We always prevail through these types of scenarios, and to not panic and sell your investments or sell your stocks. And that's kind of the most important part. And I think he saved himself on that side of things. Regardless of the political downtrend or what's happening there, I don't want to be in that decision of putting a value on a person's life, but it was important to see because that frustration that the two gentlemen have, or especially Andrew, is kind of, I believe, that frustration that a lot of people have around the world. And to cap it all off, the much anticipated press conference happened on Friday on the White House lawn. Donald Trump spoke to the media about the current situation with China. Now, obviously, there's a lot of different factors going on, stemming all the way back from the trade tariff wars that were going on, a year ago, to now the COVID situation, and now with the Hong Kong autonomous situation happening now. So everybody was looking forward to him addressing the media. He started off talking about the World Health Organization. He has canceled that relationship moving forward. One of the key points was, China donates $50 million a year to the World Health Organization, whereas, the US donates $450 million. And he feels that, the US didn't get the right communication and the right information that was available when they came out. Moving forward, China took over that autonomous power that Hong Kong had. So there was a treaty that was signed between Britain and China in the 80s, and it gave them free reign, their own government for, I forget what the number of period of time is, but I believe there's still 27 years left on that treaty. So basically what Trump's come out and said is that we're no longer treating Hong Kong as a separate entity. They're now going to be, treated as China. So there's a lot of restrictions that they once had, whether it was, extradition or customs or technologies that they traded between the two. Well, now that's going to cease, where, the markets didn't really react to the news. And I don't think that they're pricing in the scenario that's actually happening right now. But that's something that, a lot of people definitely have to open their eyes at and look that there is a superpowers struggling for power right now. And that is all for this week in the market recap. I hope you enjoyed the video. Thank you for tuning in. If you made it this far, make sure please give me a thumbs up if you learned something new. It definitely helps the channel grow. Make sure you subscribe and turn the notification bell on if you enjoyed. I will throw my Instagram up here. I post charts, graphs, and some motivational quotes to help get you through the week. I look forward to seeing you guys next week. Have a great week on the markets and happy trading.